All right, guys, what's going on? My screen is off here, or my video is off here. Um, I'm not in my office, so I got a lot of people running around me who do not want to be on video. So video's off, but you should be able to see my screen and hear me okay. Could someone give me just a little shout out? Let me know. Okay, thanks, Tim. Tim's always let me know as usual. Okay, all right, let's go ahead and get started. So we're going to talk about a lot of different things today. What I want to start with is a quick discussion on the Focus 50. We're going to have by Monday a big change in the Focus 50. Today we're going to talk about the discards, the stocks that have been removed from the Focus 50. We'll talk a little bit about the current market, but won't get too in depth in that. We do enough of that in the report and in the chat. A quick review here of some of the stuff we talked about last time, because we're still in the midst of earnings season, what we should be watching for. The continuation of discussion on software. I'm going to revisit three of the beaten down, back from dead stocks that we had talked about before, and where are they now? And then also, not from the last, I don't think this was in the last pop-up, but about a week ago, we talked about NVDA and the options play called the bull call spread, a debit spread, related to playing earnings, the earnings, potential earnings run-up setup that we trade, and holding through earnings, which you can do with a bull call spread. So if you don't, even if you don't trade options, it's worth taking a look here, and the potential for learning this options play for earnings. All right. Okay. And if you guys don't have any questions, we'll go ahead and start. As usual, if you guys have any questions as we're going, just post them in the chat. So we have 10 discards from the Focus 50. You guys know I keep a Focus 50 list. It's on the Swings doc as well. I don't know if I have the Swings doc up right now, or I do. Here we go. This is the Swings doc here. You guys should definitely keep this front and center. It has links to the Focus 50, either for TC2000 or for FinViz if you don't have TC2000. There's an AI spreadsheet, which I need to update. It's been about 5 months here, and a lot has changed in AI, but it's still pretty good. A lot of different AI stocks and different areas within AI. And then we have past pop-up sessions and the topics. So if you want to learn about bull call spreads, these are all the ones we talked about. And all the different things related to options and all of the stuff related to swings. You can just go to that pop-up session and go to that. But the Focus 50 link is in there. And you can see I have it up here. I also keep a candidates list, and a lot of our stocks come from that candidates list. So obviously, a lot of the additions are going to come from here. As I see stocks I like, I put them in the candidates list. Now, this is not an exclusive list in terms of exclusive to what we'll trade. So the stocks that get removed from here, I'm not necessarily saying they're not tradable stocks, they're not good stocks. We're just trying to keep 50 of the best stocks to be watching. And I call it the Focus 50, but as you can see here, there's 54 in them right now. I allow about a leeway of 5. Sometimes it's a little less, 47, 48. But in this market, it's tough to keep it at 50. So we have 54 right now. It's down to 44, and I'll be adding probably around 10 by Monday. And then on Tuesday or Wednesday, we will discuss next week. We'll discuss the additions. But let's talk a little bit about the Focus 50. So we'll go over the discards and review in a second. W, SoFi, Shop, Open, HIMS, Alta, Coin, VST, Bumble, and Kava. Again, this doesn't mean we can't be trading them. If you're in one of these stocks right now and you're looking at this saying, oh no, maybe I shouldn't be in it. No, your setup's probably still there. But there's various reasons why we're taking them out and replacing them with better stocks to potentially trade. So we'll review the Focus 50 and these discards in a second here. Let's talk about what we're looking at for the Focus 50. Now, when we trade, it's basically technicals, right? I do pay a little bit of attention to fundamentals because the stocks that trend the most in any given year usually have some strong fundamentals. And there are specific fundamentals we look at. We don't really break these down too in depth. Just look at the percentages and fundamental trends. But the things we look at, the main two things here are earnings and revenue growth. And the key we're looking at here is growth. So You could have negative earnings, but if earnings are growing, that's okay. If revenues are growing, that's okay. We're looking for explosive earnings and revenue growth, and really the biggest key here is revenue growth. You can actually have negative earnings, but very strong revenue growth. Maybe there was a lot of spending. They're not at earnings yet, but their sales are growing like crazy. But they're in the development stage, and you see that a lot. So we want to see that strong revenue growth. So if we're seeing that, almost all of the Focus 50 stocks will have very strong revenue growth. We want to see institutional ownership and that increasing. Institutions are what really push stocks. So obviously, if the institutions are behind them, that's a good thing. And then we want to see the revenue and growth trend. And related to earnings, we want to see that earnings reactions are generally beating what the analysts think. It doesn't have to happen every quarter, but in general, we like to see that. So if these things are in play, they're good candidates for the Focus 50. And almost all, I do make exceptions on these, but almost all the stocks in there have very good revenue growth, institutional ownership, strong trend related to quarter over quarter earnings growth, revenue growth, and beats, and then beating expectations consistently as well. So we have that, and then of course the technicals. Most of these stocks are either going to be in uptrends, they're breaking out. They might not be in an uptrend, but they're breaking out of a bottom formation or in strong bottom formation because of some of these fundamentals here. And usually these technicals that we watch relate to this here. We do our moving average analysis, so that becomes very important for our trends. I really start to watch, one thing we want to see, especially in the trends, 9 EMA above the 50, above the 200. Or if the 50 is below the 200 on, say, something that had been downtrending or is a bottom formation, it's getting close to breaking over that level. Then price action should be above these moving averages. If they're not, we start to watch them if these overall patterns are breaking down, especially if the 200-day moving average, that long-term trend, is starting to break down. Then we want stocks that are showing relative strength to the market, to their industry, and strong percentage gains. And then in general, what you're going to see is a lot of the stocks in the Focus 50 come from the same industries. So we want to see industry strength as well, because outside of the market, the industry is one of the biggest movers of stocks. So we do a lot of industry analysis. So that's what we're looking at here. Let's go ahead and take a look at the stocks we removed. So W, SoFi, Shopify. Let's move this over here. Here's the Focus 50. And what I like to do every once in a while, I'll go through and look for the stocks that I want to weed out. And what I'll do is I'll take the 90-day, and here's the best performer, ranked by best performers. So you can see here, SNDK, best performer here, VIAV as well. So we'll take the bottom performers. So these are going to probably be good candidates to get rid of, right? So first one, no surprise if we look at the industry. So W, we're getting rid of here, discard. Now notice here, I keep a discards list here. And again, these discards doesn't mean they're not good stocks or we couldn't trade them. A lot of these discards will come back into the Focus 50 if they rebound. So if you look at W here, notice here, you can see why we liked it when we liked it. It was in a very strong trend. Look at all that accumulation that was coming in. And then it started to pull back, stayed above the 50. Here it dipped below the 200. This is where I start to get concerned. So that was, around March when it didn't remount. So even when it dips, I watch for the remounts. And then you can see here it failed once, failed twice, and now is starting to downtrend and look toppish. And notice here as well, I didn't put accumulation distribution under technicals, but you guys know we pay close attention to that as well. And you can see some distribution setting in here, looking very different here. A test you can do sometimes is take the price action off, and you can see the trend by just looking at the volume here. I can see, most likely, if I didn't know anything about this stock, the price action, my guess would be it was trending higher here, and it doesn't look so good here, right? The volume is telling us that, and that's exactly how it has played out here. So from a technical perspective, not great. So I could probably, I can replace it with much better stocks. We know there are a lot of good, strong trending stocks right now. And then we'll look at the fundamentals. Now, if I pull this thing out, you can see here, here is earnings per share change last quarter. Notice here it went down 0.8 since last quarter. Sales 12.7 billion, which is at 6.8%. That revenue growth is not huge, only 6%. You can see we have explosive revenue growth on a lot of these here, 67%, 23%, 51%, 25, 27, and so on. So not the best here. Now let's look at growth trend. I have this layout here for the growth trend. And actually, the revenue growth is not that bad. It just hasn't been that explosive. And the technicals have been declining. So for that reason, W is out right now. Now notice here, it still does have decent growth. You can see on the charts there. So I wouldn't be surprised, and we know money has poured out of retail, and that's probably what's happening with W here. If it were to make a comeback, it could definitely be a candidate again to be back in the Focus 50. And I will be watching it. Just because it's not in the Focus 50 doesn't mean I'm not paying attention, but it is no longer in the Focus 50. All right, so let's look at SoFi now. Whoops, wrong ticker here. SoFi has been discarded as well, and very similar here. You can see again why it was in our Focus 50, and then look at that strong accumulation, and now look at the distribution. And we can see the technicals as well. Broke below the 50, broke below the 200, and now the faster 50-day moving average is underneath the 200-day moving average. So this is very topish here. Has stayed under the 200 for a long time, so no remount in play. And then if we look at the growth here, it is strong in terms of revenue growth at 40%, earnings per share up 4.65%. So those numbers are all right. And if we look at the revenue growth here, very strong. So definitely will be a candidate if price action will rebound. So you can see why it was in it. It does have it's got strong fundamentals, but obviously price action says something different for us. And not only price action, but distribution. So SoFi is out as well. And now another, even though software application, we know Shopify is related to retail. And you can see a lot of the laggers here. They're retail, credit services, related to real estate services, capital markets, and so on. Some of these things have been lagging. Ulta's out as well. That's retail as well. Coinbase is out as well. And again, that's related to capital markets or financial. And you can see Shopify here, similar pattern here. We had a very strong uptrend, good accumulation. Our growth numbers were very good as well. And now it's topish, has stayed above the 200-day moving average. I was watching it very closely. We talked about in the report when it was getting close to remounting the 200-day moving average, but that has failed now and back in downtrend. So Shopify off the list as well. And we'll take a look at the revenue growth here. Still strong. You can see again why it was on our Focus 50, but it's got to have both of these. So it's got to have the fundamentals and the technicals, and does not have the technicals right now. So Shopify is out. Now we can look at Open here. I like Open a lot still. I think it's going to take one strong earnings to really make this thing explode. You can see it made its big run. Sometimes these things make the huge run, and they will consolidate for a good year or 2 years and then make a strong break. But we don't want to be sitting there waiting for that time. When it breaks, we'll pay attention to it. But we get, I really like it. The numbers were good, but now it's just lagging and still under the 200-day moving average. So nothing to really do with it here for us. So Open is out, and then HIMS. You can see here, this one's interesting because I do like the fact that it broke out here and has good accumulation. I'm just going to wait for it. There's so many strong stocks right now that maybe in a weaker market, I would keep this on because I do like the way it's trending. But this was a pretty deep pullback from 31 down to 23, testing the 50-day moving average. And the 50 is still below the 200-day moving average. And notice here, I might have still kept it on my list because I do like the price trend here. But notice here, as this is happening, revenue growth has been declining. Here's revenue year over year compared to the last. So when we're comparing here, you'd be comparing to the last year. And then this one is the last 4 quarters. So this quarter compared to this quarter compared to this quarter. And you can see that has been declining. So not good in terms of those numbers. Now, if it gets up over the 200-day moving average, I could put it back, and I'm still paying attention to it. It's not that I won't trade it, but it's no longer in the Focus 50. Alta, another retail. So you can see here, a lot of the ones that I'm removing are the retail stocks. Some retail stocks are still in here, but Alta, you can see very topish. And again, look at through this period here, and then when it broke the box here and made its nice run, very strong accumulation, and now a little bit of distribution is setting in terms of growth fundamentals. I do actually like the revenue growth. It's strong. Price action hasn't reflected that for now. And a lot of this, again, is the rotation has been so strong in retail that even a stock that has strong revenue and earnings growth like this, although it did have a poor earnings reaction, because even though revenue growth is very strong, it was expected to be even stronger. And remember, stocks move based on expectation. So this thing can have explosive revenue growth, but if it was expected to be even more, it'll still get hit here. So Alta removed as well. Coinbase, you can see here. I still like, I actually do like Coinbase's potential trade. There's still some accumulation, but still under the 200-day moving average. Growth fundamentals here declining. So some of these, I may have stuck with this one if growth, the revenue growth was strong, but it is not strong here. So for that reason, and these capital market stocks that we saw with SoFi as well, so I've removed both of them, have not been all that strong. And then obviously we have better options here to add to the list. So Coinbase is out as well. VST, I still like the energy plays, and I'm still watching VST. But you can see here, very topish under the 200-day moving average. 200 is above the 50. And then if we look at growth fundamentals here, declining a little bit, not huge, but there is some decline in the last few earnings for VST as well. I didn't remove it, but another one, and you guys know this one well because we were following when all these things were popping, we were following them. But CEG is also one that I considered getting rid of. But notice here, revenue growth is stronger on this one. So I'm going to keep CEG in there and take VST out. And then Bumble, not so good either. Look at that ugly revenue and earnings growth. And then still under the 200-day moving average. So this one is out as well. And then Kava, I really like this one coming out of here. You can see it made a very strong run from 44 to 100, so over 100% move. Pulling back hard. I still like the stock overall. It's not a pattern to trade right now, but we'll be watching it. And if we look at growth fundamentals, it's interesting here that you can see growth has been declining, but institutional ownership has been increasing. So a lot of mixed signals from Kava. You can see it as a positive or a negative, even on price action. You can see this big move here, but this hard pullback. So for now, I'm going to take it out. But again, we might trade it in a little bit, but it's not a part of the Focus 50. So these are the 10 stocks I've removed. And then we'll look on early next week, we'll talk about the stocks that are going to be added to the list. They all come from the candidates list here. And well, candidates list, and there were a couple that came out of earnings breakouts as well that were strong. So those are 10 that are removed now. So we're down to 44. Next week, we'll have it back up over 50. Again, if there are any questions here related to the Focus 50 or what we're looking at or why we remove stocks, or if you've got a candidate you think is a good stock to add to the Focus 50, you can post it in the chat and we'll talk about it. Maybe I'll consider it for an addition. Okay, all right. So that's the Focus 50. Let's skip down. Jonathan's asking, did you mention where I can get the copy of the Focus 50? Yeah, right on this document, which is in, I post it every once in a while in the main swing trading, but in alerts, just go up a little bit. and it'll be in here, or you can search right in here. It's on this document. Let me actually copy this and put it in the chat here. And again, it's in the Discord alerts page as well. All right, let's now skip over to uh, the bull call spread with NVIDIA. So, as swing traders, remember that we generally don't want to be holding through earnings, right? Earnings is holding through earnings for short-term swings is essentially gambling. Now, if you're a long-term investor, obviously you're always holding through earnings. And if you've got longer-term position trades, you're riding out a trend, maybe 4 months, 6 months, a year, 2 years. Of course, you're going to have to hold through earnings, but our standard swings, a few days to a few weeks to a month or two, we generally do not want to hold through earnings because the risk is too high, right? In terms of potential gap down. And we've seen this many times where even if we're right about the fact that it's a stock we like and we think they're going to post strong numbers, the stock can still gap down. So we don't want to be holding through earnings. If I'm holding, whatever it is, 100, 500, 1,000 shares of NVIDIA, and it has a kind of a black swan gap down down to 170, I'm going to get crushed, right? And what we talked about last time is the spots where we will hold is if we mitigate risk somehow. One way to do that, if you're just standard swing and you're not trading options, and let's say you have 100 or 500 shares and you entered here at 180 and now you're sitting at 227, now you've mitigated your risk, right? You got in at 180. It's not likely it'll gap down that far. And even if it does, you don't, you're probably not going to lose more than your 1% risk. So in that spot, you're okay. And look at the history of how the stock gaps down when it gaps down to give you an idea of how it could gap down. So you've mitigated your risk. Obviously, you're potentially giving up profit, but in terms of risk, you're okay. And you're getting an outsized risk reward, right? Because you're now already at about maybe 4-to-1 or 3-to-1 on your trade if you're still holding, if you enter down here. And now at 3-to-1 or 4-to-1, if it gaps up, you can potentially get like maybe 10-to-1, right? But if it gaps down, uh, maybe you're still at 1 arm, or you're at break even, or at worst, maybe you're at 1 arm. So you've got this outsized risk reward. So in that spot, you can hold. And we like to play the earnings run up when we do that. And that's a phenomenon where strong stocks tend to run up into earnings. Now, for me personally, we didn't do the standard swing for this. I did do a debit spread for this that we talked about, but not the standard swing. You guys didn't get an alert for it, but it played out exactly like we were talking about, right? NVIDIA was a very good candidate for earnings run up. Earnings are on the 20th, and you can see the move it has made going into earnings. Now, we talked about the bull call spread. Let's revisit the bull call spread now. I've got the chart here. This is what we were talking about. We were looking at it back on the 10th or 11th with a strike. Let me actually make this a little bigger so you can still see the profitability chart here. Actually, I can't get the whole thing up. I'll do it a little different. I'll just make it smaller. Okay. Hopefully you guys can see this okay. Notice here, our strike date is June 18th. That's when the options contract ends. We are buying a call and selling a call against each other, which creates a floor and a ceiling for us. And notice here, our net debit is $840. That is essentially the position size for us. So notice here, controlling 100 shares of NVIDIA at that time when it was trading at 215 would cost us $21,000, right? But now we're able to control 100 shares for $840. So for small accounts, this is great, right? Now, the most I can lose is $840. So now going into earnings, I can sleep at night knowing that no matter how this thing gapped down, this thing could gap down 40%, and I would still only lose $840. Once you hit that 840, you can't lose anymore. But gains are unlimited. So that's obviously a benefit and allows us to hold through earnings, mitigates our risk, right? And now, as it's played out, notice here, we're at the 15th today. The stock is trading at 227. So we're probably up somewhere between $300 and $400. You can 233 is at 500, 224 is at 256. So we're probably around 350 somewhere in there in terms of profit. And think about that. So on an $840 dollar position size, we're up about 350. So that's around 40%. So you've gained about 40% on your money in a short period of time now. And now, as you're holding it, you have a decision to make, right? Do I keep holding and play a potential earnings breakout? Where if this thing gaps up, let's say we get a gap up on earnings and it goes up to 245. If it were to go up to 240, let's say it goes up to 250. If it goes up to 250, we are on the 21st, we are at $1,000, right? So the potential gain there, I think, is enough that we'd want to hold here. And again, the max risk is only 840, and that's the max risk. You can get out here earlier before earnings and not take that max risk. So it's playing out very well, the bull call spread. And again, it protects you through earnings and allows you to hold through earnings. So if you trade options, look into the bull call spread. If you don't trade options and you want to learn more, we'll continue to talk about it. I've done options classes in the past. I don't know if you guys have access to those videos. And then you can go back to the swing page here and just go to where I've talked about bull call spreads, and we lay it out in some of these here exactly how to do them. So that's a bull call spread. Let's talk now about earnings. I'm going to go through this stuff really quick. We know during earnings season, there are two key setups we're trading. That is the breakouts and the breakdowns, and the breakout pullbacks and the gap reversal. Actually, a lot more setups than two. But let me just quickly do a rundown here. So we know when the stocks gap up, we're essentially looking for value plays or breakout plays. And what I mean by that is we're either looking for pullbacks to a range. You could even go all the way down to here if it shows strength. So these are essentially the pullback plays, and we go more in depth in them in some of these discussions here. Or if it consolidates near the top of the range or runs and then consolidates, we're playing what I call like flat top breakout, and we're playing the breakout of those range. So on the gap ups, that's essentially what we're looking to do for longs. If we short, there's specific areas to short as well, but we're not really looking for shorts right now. And then there's the gap reversals. These stocks that gap down are often, especially in our strong stocks and like a focus 50 stocks, these tend to be overreactions, and we're playing the either the reversal into the gap, the continuation in a reversal candle, or if it completely invalidates up here. So that's essentially what we're looking to do for earnings. So continue to be on the lookout for those setups playing out in our breakouts and breakdowns. Let's just see. We'll quickly flip through the list here of earnings breakouts and breakdowns. Now, remember, not every stock you're looking at is going to put in a good setup. I'm in Pinterest right now. You guys know I'm getting close to getting out here, but this was a pullback play. Here's SITM, the breakout pullback, holding at the 90 MA in the bottom of the range. So I'll be watching this one closely. Now it has to show strength here. If it continues to slide, it's actually a short setup in the gap. But if it holds this level and shows strength, that would be a good potential setup there. Okay, a couple more things really quickly here. IGV, we've been talking about software for a while, and we were talking about it here when it was potentially making the bottom formation. Now we are in the midst of bottom formation breakout. So keep an eye out on software stocks. There is a little bit of a split market in software in kind of the haves and the have-nots and specific areas within software. So anything related to AI, of course, is doing well. And you know, the stuff related to real estate, capital markets, and so on, not doing quite as good. But overall, we want to be paying attention to software now. Then some of those stocks that were beaten down last time, we're still talking about BABA. You can see here it tested the topping pattern low. And when we get that topping pattern test, but it doesn't fail this leg here, that's usually a very strong signal. And it's playing out as we expected here. We talked about this yesterday or when this broke out here, that we're watching for a close above the 200-day moving average. This candle is a very strong candle on earnings when it has initially a negative reaction, but closes very strong. Now, it's pulled back with the market today, but we'll be watching it. Now, I won't touch this unless we get a close above the 200-day moving average, but for the most part, it's playing out as we thought it would. And of course, Oracle is, we pretty much called Oracle here as a bottom formation. Then we got the breakout, and you guys know I'm in this and targeting the 200-day moving average for the spot to profit take. And then BA has been lagging a little bit, but is much stronger than other airlines. Airlines have been weak, and BA still, and we know BA is also related to aerospace and defense. So obviously that helps it. But this one has shown a lot of strength as well. So I would still continue to watch these stocks that we were calling back from the dead. They still look very strong. And again, the reasons we like them, pattern accumulation, industry leadership, and strong fundamentals. All right. The current market, I'm just going to go ahead and save this for when we have our report today. One thing I do want to talk about, though, we haven't talked about gold and silver. We've talked a lot about the metals and commodities that are moving. Gold and silver are looking very toppish, and we kind of talked about that. Remember, we drew this here. We got the higher low here, the lower low here, failed at the 50-day moving average, and has failed again, and looks like it's continuing down. So gold looks toppish here, and then notice the distribution volume as well. Even the CMF indicator is weakening, and silver as well. Very similar pattern here. All right, guys, good session as usual. If I don't see any questions here, so we'll do another one of these early next week where we'll go over the additions. All right, guys, talk soon.